Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, we've seen a very solid recovery coming in the market. We saw 25,159 levels on the Nifty, but post 11 a.m., we saw the markets kind of trying to stage a recovery, and post 1 p.m. They took off completely, and we of course have 25,400 back on the charts as well. The economic survey was stable today in the Parliament, and it is pegging FY27 GDP growth to be in the range of 6.8 to 7.2%. Higher range, of course, 7.2%, and the medium-term potential has been up to 7%. So, some bit of comfort when it comes to the growth picture, and of course, we'll talk about a lot of other aspects that were highlighted in the economic survey as well as we go along the show. But good recovery, and the mid caps today are underperforming, and it's the benchmarks that are doing well. And mind you, it's the Sensex expiry as well. So some bit of volatility, and towards the last half or second half of the session, we do tend to see volatile moves either on the upside or the downside. But thankfully, today it has been on the upside. In terms of the mid cap index, just want to see what it's doing right now. It's up just about 0.2%. The Nifty as well has cooled off from the day's high, but nevertheless it's holding on to that 25,400 mark. Good to see the Nifty Bank index as well. It has staged a near 1% recovery from the day's low. In fact, 59,990 is where we are at, round about that 60,000 level on the Nifty Bank index. Of course, that's something that would provide a lot of comfort, to see the Nifty Bank back around that 60,000 level. Of course, it's metals, relentless buying in metal names, thanks to the rally in the underlying commodities as well. Silver, for instance, crossed the 4 lakh mark today for the first time. Gold prices, spot gold prices, breezed past that $5,500 mark as well. So yes, relentless buying in metals. Not surprising then that the Nifty metal index is up somewhere around 3%. Just want to see what the metal index has done on a week to date basis. It's up already 7.5%. So yes, metals sparkling, in tandem with the commodity or precious metal prices. Energy is another pocket that's buoyant. Yesterday as well we saw the Nifty Energy Index gaining 4%. Today another 2%. Given the fact that crude, Brent crude is back above that $68 mark. So in the last couple of sessions we've seen crude prices tick up by 5% or so as well. Real estate. Good to see the real estate index make a comeback. Yesterday it saw 1.5% gain. Today as well up almost 1%. This sector has been hammered out of shape, and today, in last few days, we are seeing some bit of buying emerge in the beaten down real estate sector. On the flip side, FMCG under some selling pressure. PSU banks witnessing some profit taking. Pharma, autos, IT are among the other laggards. Just take a look at some of the individual movers before we bring on board our guests for the day. Asian Paints, ever since it reported numbers, the stock has been on a downward trajectory. It is seeing red on the screen today as well. It's the top Nifty laggard, 4% down on Asian Paints. SBI Life as well. That stock is down 3% post earnings and some brokerage calls. The stock is seeing some bit of selling pressure. Maruti, there's some brokerage notes as well, and the stock has been under pressure ever since the numbers were reported. There was some pressure on margins on the back of a one-off, but yes, the stock is down, and so is BEL. On the other side, you have Tata Steel, L&T after good numbers. It's up and about. Axis Bank has handed in a good performance, and ever since it reported numbers, the stock has been on an upward trajectory. Eternal and Tata Motors are some of the other names to highlight in terms of gainers. But let's bring on board our guest for today. Then joining me is market expert Anshul Saigal. Anshul, always a pleasure chatting with you. But going into the budget, we are seeing some bit of perk up. But what do you see? I mean, what are your expectations? Do you think it's a good fact, or it's a good point that we have muted expectations going into the budget? What is your take?
Hi, afternoon, Nandita. Always a pleasure. Yes, going into the budget, generally, if you go back 20 years and you see the trend, every time we have muted expectations going into the budget, chances of budget surprising positively, those rise. And it's no different this time. For nearly a year and a half, Indian equities, particularly the broader markets, have been on a downward trend. And more so in the last 1 month, where equities in the small and mid cap space have really taken a hammering. In that context, this budget becomes interesting because it could well act as a trigger for the markets to reverse. Although just one event is rarely enough, there can be a confluence of events. We've seen what happened with the EU tariff deal. If something similar plays out in the next 3, 4, 6 months with the US, that could be taken very positively for the markets. But suffice to say that we are entering the budget with low expectations, and chances of a disappointment here are that much lower. Hence, this is a good setup.
Okay, a good setup. Chances of a disappointment are low, especially when you have low expectations from the budget. But yes, let's see whether or not it manages to surprise on the upside or not. But we had the economic survey being tabled today. Growth being pegged at 6.8 to 7.2%. What kind of a narrative does this set as we head into budget? Your first take. What stood out for you from the economic survey today?
The one thing that we have to take from the economic survey and also from Indian GDP in general is that the conversion of Indian GDP into corporate earnings is actually quite strong. By and large, I mean, if you were to compare, say, the GDP of the Chinese economy and how that converts to corporate earnings over there, India stands head and shoulders ahead of China and so many other countries. So a 6.8 to 7.2 print is actually quite positive, and that should suggest that tailwinds for corporate earnings are only going to remain as we move into the next year. So on that note, it is definitely a positive. Now, there will be, of course, the aspect that markets will look for, which is fiscal prudence. Remember, around the time of COVID, we had hit a number of 9.5 or thereabouts, and we are down expectedly to about 4.4 in the current year. And if this trend of fiscal prudence continues in the current budget, combine that with the GDP growth, and markets will take that positively. And also, if you look at the current establishment and their track record, the way of functioning, it does look like fiscal prudence will be the sort of hallmark of the current budget as well. So by and large, take both of these things together and we are in a good space.
Okay, but what about the rupee depreciation? Today we came very, very close to that 92 handle as well. What are you expecting in terms of how the government tackles this problem of the currency depreciation despite weakness in dollar? And of course, last year we were the worst performers when it comes to the currency as well. And this year has been no good either. So, any thoughts?
So this is also a sort of, bulwark against the tariffs in a sense, because the government is letting currency depreciate so that our exports remain competitive. Bear in mind that a 50% tariff is really, keeping India in the highest tariff bucket. And so our exports become highly uncompetitive at the moment. And in that context, a depreciation of currency only improves the situation marginally. Of course, at the end of the day, it will have to be a sort of tariff deal that India will have to do with the US. But in the near term, this is a balancing act that the government is doing at the moment. In that context, again, if this continues, this will again be a deterrent for FIIs to come into the country. But our guess is that by and large, the large chunk of the depreciation is behind us. From here, we don't see material depreciation, although I must confess that I'm not a currency expert, but seeing the setup at the moment, it looks like majority of the depreciation is behind us.
Sure. You pointed out that the upside from the GDP figures, it's kind of trickling into earnings as well. But on the other hand, the rupee depreciation is also capping earnings growth, right? In that sense, and looking at the performance thus far, What are your expectations in terms of earnings growth for FY27? Would it be in double digits at all?
See, for exporters, it is a positive. For importers, currency depreciation is a negative. So that in many ways kind of balances out, right? But from a high double-digit number that we grew in FY24, in FY25 we saw some moderation, and FY26 a further moderation. We'll probably end this year at about 7-8% earnings growth on Nifty. For next year, on a low base, we are likely to see an acceleration. The expectation currently is somewhere in the region of, say, 13 to 14%. And just going by last quarter's upgrade to downgrade ratio, we did see an upgrade in the last quarter of about 2% on Nifty. That should translate even in the coming year as well. So by and large, low base, and on that, an acceleration of earnings is likely in the coming year. We think that the GDP tailwind that even the economic survey seems to suggest should translate into earnings trajectory moving up from here.
Okay, point taken. But last couple of questions then, Anshul. Stupendous rally in metals, and I mean, every other day, you see gold, silver prices, rallying away, and of course, key levels being breached. But how would you look at the gold to silver ratio? Would it look unattractive? How should one catch this? Is there a top? How would you really look at this, stupendous move in precious metals? And of course, looking at that, you can see stocks like Hindustan Copper, they've also been flying away.
Correct. So, Nandita, the basis for any move has to be physical purchase of an asset, right? So if silver is going to 4 lakhs, it is because in the market, somebody is putting money on the table and buying blocks of silver. And as we very well know, while it is an ornamental metal, it is also an industrial metal. And everybody now, everybody and their grandmother knows that this goes into industry, and industry needs silver, so they will keep buying. On the flip side, if you just look at the mathematics of this, say 3 months back, when you look at the uses of silver, one of the key uses is in solar panels, and there is a huge demand for solar energy, and solar panels as a result have a huge forward demand for the product. Now, silver used to be 10% as a proportion of cost of a solar panel. With the rise in silver, that number has gone to 30% and higher. Now, when such a move happens and the impact on cost is so substantial, clearly the economics of that solar panel will have to change. Or the tariffs that would need to be applicable for making solar energy viable would also have to move up. If that doesn't happen, then the demand for panels will have to come down, because nobody will be willing to buy panels at a loss. And so we are at that stage where such a substantial move in such a short time in silver may just lead to many of the final end uses of silver being unviable or not really going through. In which case, demand comes down, and that impacts pricing. So this is a classic cyclical trend. And in our judgment, at these prices, once silver has moved so much, as also many other metals, one should really be cautious at this time and not jump into the trade in the hope that what happened in the recent times will happen in future as
well. Okay, so solar panel sector, then perhaps the investment case, does it get stunted for now?
Demand is huge, Nandita. It does get a little postponed for sure, but it doesn't mean that the sector as a whole will not see the demand that we were expecting, say, 6 months back. That demand remains. Demand for power remains. and demand for renewable energy remains. And solar being the cheapest form of renewable energy, clearly that also remains. So it's just maybe a postponement of that demand.
Okay. All right, postponement. Okay, lastly, which are the sectors that you would be keeping on your radar, in terms of budget announcements, anything that, you would look at really?
What has happened in the last, say, 1 year and more so in the last 2, 3 months is that a lot of quality names, which were really trading at, very high valuations, and people were hoping that these valuations correct. Those valuations have come down quite materially in many instances, as much as 40 to 50% down. And now at these numbers, the valuation to growth metric looks quite favorable. Take the case of CDMO companies in pharma. Many of these companies were trading at 100 to 150% higher prices from current levels, say a year back. And they're down 50, 60, 70% in many instances. And these are quality names, not just fly-by-night operators. Valuations have corrected, time correction has played out, and in that space, value has emerged. Look at, in the financial space, numbers are coming in quite robust. Prices have corrected, housing finance, NBFCs, even banking names, their prices have corrected and valuations have become attractive. Capital goods, certain defense names, even certain discretionary consumption stories have become quite attractive. So there is opportunity in the markets, albeit this has to be a bottom-up approach to buying stocks. You can't take a blanket approach to buying because many pockets of the market still remain expensive. And those are the pockets that one will have to stay away from.
Okay, got your point. Keep a bottoms-up approach at the juncture, and of course, all those sectors that Anshul mentioned, of course, keep that on your radar as well. With that, Anshul would like to thank you for taking out time. Look forward to more interactions, especially after the budget announcements.
Would be my pleasure, Nandita. Thank you for having me. Look forward to meeting you again.
Thanks a lot. Thank you. All right, we'll move on and look at what the market is doing as we wait for our technical analyst to join us. 25,400 holds, 76% up move on the Nifty. The mid cap index, although, is underperforming today. Mind you, yesterday the mid cap index was up somewhere around 1% or so, and did well, even though the headline indices were fairly muted. Aside of that, look at the bank Nifty around that 60,000 level. The rupee is around that 91.93 level. It made a new live flow of 91.99 earlier, came very close to that 92 handle. And yes, currency of course continues to make record lows. In terms of sectors, as I mentioned, metals doing well. So Tata Steel, that stock is up somewhere around 4.5%. We have Hindalco as well, up 2.5%. Some of the other names I want to mention are the likes of ONGC. ONGC up another 2.5%. Of course, yesterday both ONGC and Oil India saw moves of somewhere around 7 to 8% thanks to surging crude oil prices. Last night, Brent topped that $68 per barrel mark as well, which is providing a further fillip to some of these upstream oil companies. From the banking lot, ICICI Bank is doing well. Axis Bank, of course, another 3% up on this particular stock. This stock has been doing well, especially since it reported numbers, in fact, overtook Kotak Mahindra Bank as well in terms of market cap. Aside of that, you have some, although auto index is down, we are seeing Bajaj Auto that's trading with gains of 1% or so. Some IT names here and there, the likes of Wipro, doing well. On the flip side, we spoke about SBI Life and Maruti, but M&M continues to go downhill. BEL as well, some bit of profit taking. Numbers were strong, mind you, but the stock is witnessing some bit of profit taking. Of course, defense names have been in favor ahead of the budget, as is always the case. But today, some bit of profit taking after good moves coming in on some of these defense names. Some consumption names are under selling pressure. HUL, Trent, Titan, ITC, all of them are trading with cuts. You have Infosys from the IT pack not doing well. Reliance Industries as well, 0.5% down or so. In terms of some of the mid-cap movers, then let's take stock of which are the counters that are doing well on the Nifty 500 index. Just want to, of course, Hindustan Copper, who can forget that stock. This stock is hitting fresh highs, on a daily basis. 20% up move on Hindustan Copper, locked in upper circuit. Some of the other names, GMDC, that's up 10%. ABB India is also up. ABB PLC, the parent company, reported numbers, and the India business orders have been fairly robust, in excess of 45%. So that's why ABB India is also up somewhere around 9% or thereabouts. GE Vernova post numbers up 8.5%. eClerx, that also reported numbers, up 6%. Gillette India, V-Guard, Siemens Energy, these are some of the counters that are doing well. On the flip side, Five-Star Business Finance, that stock is down 11%. Some of the exporters like KPR Mills that saw good fillip after the India-EU trade deal, they have come under some bit of selling pressure. KPR Mill is down 6.5%. KPIT Tech reported numbers, that stock is down almost 5.5%. Escorts, that's also down. Motilal Oswal, that saw good uptick after numbers yesterday. Today, some bit of profit taking there as well. But on that note, let's see whether our guest is ready to join us or not. Nilesh Jain, Head VP, Derivative and Technical Research at, he will be coming in just a bit. But let's take stock of some of the movers then. Canara Bank, that's another one that reported numbers. Let's take stock of it, really get the stock on the screen as well. Net profit was up somewhere around 26% on a year-on-year basis. Net interest income was muted at just about 1% growth. And gross NPAs also, eased a bit. Asset quality improved. And of course, the stock, I think it's not trading in the green. It's, in fact, last time I checked, it was down somewhere around 3% or thereabouts. So I think the NII growth is fairly muted, and that is why the stock has taken a beating of 3% or thereabouts. But on that note, Nilesh Jain joining us. Nilesh, lovely chatting with you. Just about 5 minutes to go for the markets to close for the day. After today's up move, what is it looking like? We've had 2 good days of trade. Would you say that the trend is reversing? If it hasn't really reversed, but would you say that the bottom is in place? The worst is over?
If you see the structure in last 3 sessions, we have seen a very strong rebound where the Nifty sustaining well above its long-term 200-day moving average. Although it's too early to comment whether we have bottomed out, but yes, right of the budget, looks like we may see a follow-up on the upside towards 24,500 to 24,600. So that kind of level we are keeping an eye on the upside. So buy and decline should be the strategy as long as Nifty trades above its 200-day moving average, which is currently placed at 25,200. So that should be the stop loss on the closing basis. Today, we are getting a very good close. Even if you see the volatility index India VIX, which has declined by almost 1%, and it is approaching towards the comfort zone for the bulls. Overall, given this kind of a setup where you are getting participation from the Bank Nifty as well, which is leading from the front, and we have also seen an outperformance. So Bank Nifty is likely to move towards 60,500 to 61,000. On the back of that, we may see some bit of a follow-up move in the Nifty as well towards 25,500 to 25,600. So overall, it looks a very good close from a sectoral perspective. We are also getting a good participation from the metals specifically. So we are strongly bullish on metals as well.
Okay, strongly bullish on metals, and of course, look at the counters like Hindustan Copper, Hindustan Zinc every other day. Solid moves coming solid moves on these counters. But we'll talk about that in just a bit. Any BTSC strategies, Nilesh?
Yes, Nandita. So overall, given this kind of a setup where we are witnessing a very strong close, Adani Port is giving a very good close. So we may see a follow-up in this particular stock towards 1450 on the upside on immediate basis, followed by 1470. So keeping a stop loss below 1425, Adani Port is looking positive. Apart from that, NTPC is another stock where we have seen a good consolidation breakout, a multi-month breakout, I would say, in NTPC. So a follow-up move towards 365 to 375 can be seen. Keeping a stop loss below 350, NTPC is also a buy.
Okay, Adani Ports, NTPC, those are the stocks to keep on your radar as BTS strategies from Nilesh. But Nilesh, we're talking about metals. Hindustan Copper, another 20% up move and locked in upper circuit. How should one really approach these stocks after the kind of moves they've already seen?
Right. So, if you see the structure of the copper on MCX, where we are witnessing a very good breakout across all metal commodities, if you see, we have seen a very good run up. Aluminum hit a fresh record high. In fact, precious metal, both gold and silver, are trading at all-time highs. Zinc, nickel, in fact, across all metals, we are witnessing a very strong momentum. For copper prices, looking at the setup, it looks like we are likely to see a strong momentum to continue. On the back of that, Hindustan Copper today it is closing on the upper circuit, but I still feel there's still a very strong momentum we can expect on the upside towards 850 to 900. So that's the near-term target. If at all you get any meaningful decline in this particular stock, that should be used as a buying opportunity today. In fact, we saw a breakaway gap in this particular counter as well. So a very good price and volume breakout. I still feel buy and decline should be the strategy, and another leg on the upside towards 850 to 900 can be seen. If somebody is already holding the long position, can ride this momentum, keeping a trailing stop loss below 730, and the structure looks very strong.
Okay, structure still looks very strong on a Hindustan Copper. Pull up the stock chart of a five-star business finance. That stock hit an all-time low. Numbers also came out. I think there was a fair bit of pressure on asset quality. Any thoughts on this particular counter?
We have seen a breakdown in this particular stock from the levels of 500. In fact, that breakdown was seen in today's trading session itself. It's a price and volume breakdown. So looking at the structure, looks like this weakness is likely to continue further. And on the lower side, we may see the levels of 430 to 400 as well. So first of all, avoid taking any contraband in this particular stock. The structure is kind of a sell on rise. And if somebody is already holding the long position, I would suggest to exit on pullback. So sell on rise kind of strategy should be deployed in this particular stock.
Okay, sell on rise, that should be the strategy on a five-star business finance. But let's talk about SBI Life as well. The stock is out of favor. In fact, I think it's down somewhere around 3% or so. Reported numbers, we've had brokerage calls as well. Goldman Sachs has a buy call. Target price is in excess of 2300. Of course, margin did see some decline by 25 basis points on a year-on-year basis due to the input tax credit loss due to the changes in GST rates, right? Even Bernstein has an outperform call. But, we did see spurts of buying on some life insurance names. But, last couple of days or last 5-6 days haven't really been all that great for SBI Life in terms of returns. How would you approach some of these, life insurers?
Within life insurance space, I still feel SBI Life is still a better option given the kind of a setup we are witnessing. Although today we have seen some bit of crack, but it is still trading well above its 100-day moving average as well as long-term 200-day moving average. So given this kind of a setup, if at all you get any dip towards 1960, 1950, that can be a good entry point. Positionally, the structure looks very positive for 2100 to 2200, but provided you should have a time horizon of 2 months plus. And the stop loss for the long position should be placed somewhere around 1880. That's near about 200-day long-term moving average support. So buy and decline should be the strategy.
Okay, SBI Life better poised when it comes to life insurers, and buy on dip should be the strategy. What about SBI cards? Last month or so, the stock has shed somewhere around 10% or so. But, of course, if there are any steps to further boost consumption, post GST card, one would have thought that, credit card names will also see an uptick due to higher spending. But if there is further impetus for consumption in the budget, is this a good time to take positions in a stock like SBI card? I hold that thought. We'll talk about that. I just want to take note of the market close as well. Nilesh, I'll just come back to you in a bit. We've shut shop for the day at around 25,418 on the Nifty. The Sensex has shut shop at 82,560 or thereabouts. So it's just about 0.3% kind of gain. But we did well to recover from the day's low, in fact, and end the day in the green. Mid caps were underperforming the benchmarks, just about 0.2% kind of gain on the Nifty mid cap index. The breadth of the market was also in favor of laggards today. 2:3, that's the NSE advance decline ratio. 1229 advances to 1757 declines. Yesterday, it was a different picture. We saw a very, very strong advance decline ratio coming in. But today, portfolios won't be all that happy today because of, the underperformance that we've seen in the broader end of the market. But let's take stock of some of the sectors aside of metals. What did well was energy and real estate also for a change. For a second day on the trot, we saw buying emerge in realty names. Bank Nifty, we've spoken about it, 60,000 almost here, 61,000, you could look at that level as per Nilesh. On the other side, you had IT, FMCG, PSU banks, pharma, autos, all of them were out of favor. Autos, in fact, have been out of favor for last few sessions itself. Of course, the big movers on the index included the likes of, in terms of gainers, you had Tata Steel, Hindalco, all these JSW Steel, all of these metal names doing well, both ferrous and non-ferrous. L&T post a margin beat and of course, positive brokerage notes. We've seen the stock rallying somewhere around 4%, Eternal up 3.5%, Axis Bank from the banking lot, and on the flip side, Asian Paints once again among the top laggards, followed by SBI Life and Interglobe Aviation. So yes, all in all, a positive close, but let's see whether we extend those gains tomorrow as well or not. We were talking about, I beg your pardon, I forgot what we were really talking about. Nilesh, talk about autos then, till the time I recall what I was talking about before the market check. Maruti, M&M, all of them have been on a downward trajectory, Maruti especially after numbers. And M&M, of course, on the back of heightened competition fears, we've seen M&M also going downhill. What's your sense? What do you like from the auto names?
Well, within auto space, right now we are witnessing some bit of correction. Maruti is approaching towards its long-term 200 DMA, which is placed at 14,200. So keeping that as a stop loss, a contra bet can be taken. But overall, positionally as well, we feel that this correction should be used as a buying opportunity. We can expect a gradual up towards 15,500 to 16,000. And coming to M&M, it has a kind of a similar setup because it has today taken support at its 200-day moving average, which is placed at 3,355. So overall, the setup is indicating there could be possibility of a pullback move. But comparatively, M&M is not looking that promising. We have seen a breakaway gap and structure appears to be a little bit sideways as of now. So better to wait for a reversal sign in M&M, whereas Maruti is one particular counter that can be added from positional perspective. But as far as auto space is concerned, we are liking Ashok Leyland. We have seen a very strong momentum in this particular stock. It is forming a high top and high bottom formation as well. So on the upside, 200 plus kind of level we can expect in a very short term time frame. One can keep a stop loss at 185 and it is a buy. And apart from that, Tata Motors passenger vehicle, in fact, this particular counter is also looking positive. So watch out for this particular stock. We can expect a strong pullback. Purely pullback move can be seen in Tata Motors passenger vehicle towards 365 to 370 and one can keep a stop loss below 340.
Okay, that's the view. Those are some of the auto names that were looking good on charts. But I think we were talking about SBI card. Any thoughts there? Numbers came out, but wasn't enough to revive the stock, so to say. SBI cards, what would you do with that?
As far as NBFC space is concerned, SBI has been a laggard. In fact, comparatively, we have seen a better momentum in the stocks like L&T Finance, Shriram Finance Holding, and also Cholamandalam Finance as well. But overall, SBI card, comparatively, if you see, it is trading well below its all long-term and short-term moving averages. The structure appears weak on the chart. And if at all you get any pullback towards 800, 840, that might be used as a selling opportunity. So as long as it trades below 850, the structure is looking weak. And if somebody is already holding the long position, can keep a trailing stop loss at 745. and better to exit on pullbacks from this particular counter purely from a short-term trading perspective.
Okay, that's the view on SBI card. What about L&T? We saw a good up move today, 4% or so. What is the next level you'll be watching out for on this particular counter?
Very good spurt, in fact, I would say in this particular stock. With that positive move today, it has reclaimed its 100-day moving average, and we can expect a follow-up move on the upside towards 4,000 to 4,100. One can keep a stop loss below 3,800, and it's again a very good bet as a portfolio. From a positional perspective, yes, it can be played from a short-term trading perspective as well. So keep a stop loss at 3,800, 4,100 to 4,150 kind of levels can be seen on the upside.
Okay, that's about let's talk. But let's talk about KPIT Tech as well. The numbers came out and wasn't all that great. Net profit was down 21%. Revenues were up somewhere around 2% or thereabouts. And there was a labor code impact as well of 60 crores or thereabouts. But margins came in lower at 14.5% on a quarter-on-quarter basis as well. The stock has been struggling. It has been under pressure for quite some time. This year itself, it has shed almost 10% or so, and it has been struggling, so to say. But post today's move, do you see a major breakdown? Do you see the risk of 1,000 being taken out as well on the downside?
Well, a very high possibility of breaking that 1,000 mark on the lower side. The reason being, if you pull up the broader chart of last 1.5 year, you can clearly see the stock is in a downtrend. And as of now, it is constantly facing resistance. It's all long-term and short-term moving averages, which are somewhere placed around 1,200 marks. So overall, sell on rise kind of a structure in KPIT Tech as well. As you have rightly mentioned, the high possibility of stock breaking below 1,000 going forward. And if at all, on the contrary, if it reclaims 1,200 mark on the upside, then there could be possibility of a short covering, in fact, of a trend reversal as well. But as of now, it's an avoid.
Okay, as of now, it's an avoid. What about a GE Vernova? Numbers came out. Profit almost doubled. Revenue was great, up 60%, and we saw the stock reacting to that as well. Last 5 days itself, the stock has rallied in excess of 20%. Would you advise some kind of profit taking here, or would you say that there's more upside, and if one wants to get into it, they could go ahead?
Sorry, Nandita, I'm not able to find this particular script as of now. Let me just check.
No problem, no problem. As you check the charts of a GE Vernova, I just want to point out that ABB India was another counter that was up quite a bit today, almost 9-10%, because ABB PLC, the parent company, reported numbers, and the India orders were up somewhere around 49%. In the December quarter, the analysts, in fact, were anticipating growth to be at 20%, courtesy of a low base in the fourth quarter of 2024. But the India orders are up almost 50%, and that came as a big fillip, and that's why the stock was up somewhere around, I think almost 10% or so, 9%. Yeah, there it's on your screen. Any thoughts, ABB India?
Right, Nandita. Before that, you were talking about G Vernova, with the symbol is GVTND. Correct me if I'm
Sure.
not. If I'm so, it is currently trading at 3,143.
Yeah,
That's
that's
the
correct.
GVTND. Right. So very strong chart structure out here. So couple of reasons for that. First of all, we have seen a very strong momentum in last 4-5 session. Today was a kind of a breakaway gap that we have seen in this particular counter, and we have seen the stock has been trading in a strong uptrend, forming a high top and high bottom formation as well. So positionally, looks like it is heading towards 3,500 to 3,600. Keeping a stop loss below 2,950, GVTND is a buy. Now coming to ABB, we have seen a very strong spurt back to back for the second consecutive session. A very good breakout can also be seen on the chart. So overall, looks positive for a follow-up on the upside towards 5,800 to 6,000. Keeping a stop loss below 5,300, ABB can be bought.
Okay, that's about GE and ABB. Of course, that's the thought there. But what do you do with the likes of Dixon Tech? It's today extremely flat today, but the stock has seen a sizable correction. In fact, it hit that 52-week low of sub 10,000 levels as well. Post this, how would you approach the stock? Would you say it's a good time to take a positional bet in this stock?
Well, first of all, EMS space as a whole is going through some bit of corrective phase, be it Amber Enterprise, Dixon, Keynes. In fact, all these three stocks are constantly forming a low top and low bottom formation. As far as Dixon is concerned, this has been the fifth consecutive months of correction. And even if you see on the daily as well as weekly time frame chart, a constant low top and low bottom formation and a falling channel can be seen. So structure wise, it still appears weak. There could be possibility of a pullback move since it has gone into extremely oversold territory. So some bit of a pullback move towards 11,000 to 11,500 that cannot be ruled out. But it is better to avoid taking any contra bet as of now because the major trend is still on a negative side and we need to wait for a reversal signal. So that reversal signal is yet to be seen in this particular stock. So it's an avoid taking any contra bet for the time being.
Okay, avoid contra bets on the EMS space and the likes of Dixon Tech. Some commodity plays that I want to get in your thoughts on, the likes of ONGC, Oil India, and a commodity proxy, MCX. MCX, of course, today as well it was up 4%. The stock has been consistently hitting highs, and of course, a lot has to be a lot has been contributed by rallies in gold, silver prices as well, and now oil has also started rallying. So your thoughts on those oil related counters and MCX as well?
Right, Nandita. So overall, oil related stocks, the setup has turned positive. As far as Oil India is concerned, back to back for the third consecutive session, we have seen a strong spurt. In fact, it has jumped over 18%. So very rarely we see such kind of a spurt in the stocks like Oil India. Overall, it's not advisable to chase at the high level because the risk and reward is not favorable. But overall, the major structure is still looking strong. If somebody is already holding the long position, can stay put in this particular stock for upside target of 550 to 600. Fresh longs can be initiated on declines. And similarly in ONGC as well, if you see in this week itself, we have seen a spurt of over 12%. But the structure overall looks strong for 300 to 310 on the upside. So keeping a stop loss below 255, buy and decline should be the strategy in ONGC. Now coming to MCX, I think it has hit a fresh record high today with a gap up opening. So overall structure looks strong for MCX for upside target of 2,900 to 3,000. Keeping a stop loss below 2,550, again MCX can be added on declines.
Okay, add on declines. That's a call on some of these, oil-related stocks like ONGC and of course even on MCX that, by the way, hit a fresh high today. But with that, Nilesh, would like to thank you for taking out time and joining in. Always a pleasure, and I look forward to our next chat as well. Thank you for joining in.
Thank you, Nandita. Thank you for having me on your show.
Thanks a lot. Well, on that note, let's move on and talk about the economic survey that was tabled in the parliament today. Of course, FY27 India GDP is now pegged at 6.8 to 7.2%, and the mood is that of caution, not pessimism. That was, the statement that was in the economic survey. Let me bring on board big market voice Sunil Subramaniam to understand, what he made of it and what's the mood like as we head into budget. Sunil, lovely chatting with you this afternoon. Sure, the guest is, in fact, I think Sunil will be joining us in just a bit. But let's take a look at some of the volume buzzers for today then. There were quite a few. Gland Pharma that reported numbers yesterday. The stock was buzzing on the back of strong volumes as well. But, if you look at Yes Bank, I think that was the top volume buzzer. Hindustan Copper was a close second. Sagility that recently reported numbers today, this stock was down 5%, but volumes are fairly high in this counter as well. Canara Bank reported numbers, NII just about 1% up. That was a disappointment. The stock down 4.5%, but saw good volumes. Eternal, that stock was buzzing today, 3.5% gains, but the volumes were pretty strong here as well. Some of these metal names like NMDC, Tata Steel, they were also seeing good traction on the back of good volumes, and so was Hindustan Zinc. But quite a few stocks hit a 52-week high, and no points for guessing. Some of the metal names and commodity related names were featuring on those on that list, the likes of Hindustan Copper, Nalco, Oil India, Tata Steel, Vedanta, MCX. All of these counters managed to hit a fresh 52-week high today. But on that note, I think Sunil is joining us now. Big market voice, Sunil Subramaniam. Sunil, lovely chatting with you. The economic survey pegs FY27 growth at 6.8 to 7.2% and says that India's medium-term potential is now 7%, which is much higher than what it used to be a couple of years ago, right? What does this tell you about the narrative going forward, and what were the key takeaways for you?
So I think, first of all, it tells you that we have reset it to a new normal. I think, and this is consciously because I think of the government capital expenditure paying off. Ever since this government came to power, the India government has been consistently increasing their capital expenditure, and the multiplier effect, I think, is coming through. That's where we have a resilience to the economy. And because the government capex is domestic oriented, right? The fact of the matter is, despite all the tariffs headwinds, we haven't been hurt. So why I say this is the new normal, because from now things can only get better as we get the India-US EU deal as well as the UK deal implementing over the next 5 to 10 years. And then hopefully a US deal also come through on similar lines. It can only take it higher. So I would say this is a new floor for our GDP growth, that in the face of the worst of the situation, we have managed this kind of a 7% average. So that's one. Second aspect is that I think that what this also tells us is that this year was a year of particularly low inflation because of a excellent monsoon and food prices going negative, and oil prices, I think, corrected from $80 to $60. So imported inflation also less. So hence this year's nominal GDP, for example, there was a negative surprise in the current year's nominal GDP. They're saying that it will only be 8%, which means if you have a 7.4% real GDP growth, the deflator is coming to only 0.6%, right? Now, obviously, that's hurting corporate earnings and EPS growth. So the stock market, there's a clue there. But for next year, if you go back to the RBI policy, and you and I discussed this, right? For Q1 of FY26-27, RBI themselves have predicted a 4.1% inflation. So I think that if that's the thing, and RBI's rate cuts are going to reinflate the economy, help in reinflate, along with the GST cuts, for next year, I don't think it's really out of whack to expect, let's say, a 4% average inflation. So now with 7% average growth and 4% inflation, you're actually looking at a double-digit nominal GDP growth, which compared to 8% this year, augurs very well. So I think the economy is just going into that cycle of very low inflation, resilient growth, to now a floor, but with a potential for inflation to come back to reasonable levels to take nominal GDP growth. And from a purely as a stock market participant, I think that's a welcome sign.
Sure, of course, nominal GDP, as you rightly mentioned, that was a disappointment this time around, somewhere around 8.7%. But of course, double digits, that's what India Inc. also wants to see. But
thank you, Nandita.
The survey warns that global shocks. Sure.
No, I said the survey said the nominal GDP is projected at 8 for the current. It says that the nominal GDP is projected at 8 for the current year. First half was 8.8, which means second half is going to be 7.2.
Yeah.
So that's a sharp drop in nominal GDP for the current year.
Yeah.
So that's a negative surprise.
Sharp drop.
Saying that, so, but I think both the GST cut and the RBI cuts have not yet played out in the economy, and that will help inflation creep up for next year. That's what I wanted to say.
For next year. Yeah, sure. But let's talk about one more point that was mentioned in the economic survey. That was that global shocks could hit India with a lag. What kind of shocks are we vulnerable to right now? Would it be the India-US deal not coming through, or anything else?
I think the India-US deal not coming through is already there in the fact that exports have not grown as much as they should have. So I think that's no longer a shock on a delay. Yes, from last year's GDP effect, the tariffs came into effect the second half of the year. So we had 6 months of the tariff impact, and that will continue. But I think it just mentioned geopolitical shocks because of the fact that Mr. Trump is unpredictable and how he's going to react to the India-Europe deal, right? In terms of whether that will help him to sign this faster, or is he going to be, truculent and petulant about it and say, "Oh, you guys want to sign with US? Go to hell. I know US will not sign." So we don't know the unpredictability of Mr. Trump. That's why, as you know, I've referred to this as a TERP, right? The Trump unpredictability risk premium that Indian markets have to pay. So that's one geopolitical uncertainty. Apart from that, the impact on oil prices of any uncertainty. Like, see, initially the Venezuela thing was supposed to have brought down oil prices, but contrary, they went up to 65. So if continuing geopolitical tensions around oil come, and let's say oil trends to 65 to 70 to 75, that's the risk which will hurt India. So I think we're going to be very specific what exactly will hurt India. One is further delay and maybe a accentuation, because he keeps throwing these other tariffs that if BRICS forms a currency, I'll put a tariff, all kinds of stuff he keeps saying. So it's just Trump related, the fact that he's unpredictable, and the fact that oil in the whole commodity space rise. You've seen metals rise, but oil hasn't really it's actually corrected over the last 1 year. It's only the last 3 months it's gone up. So geopolitical risk, I would say from India perspective, are these two. And the third one is a slightly indirect effect. So I'll explain what that is. So when geopolitical tension, which has nothing to do with India, rises, automatically the impact is on gold and silver prices. And as gold and silver prices, two effects come through. One is the actual rise in gold and silver, because we import all of our gold and most of our silver. But it's also the Indian investors' actions in putting more money into ETFs, which then increases the amount we need to buy gold for those ETFs. So last month itself was around 15,000 crores. So you're seeing that that's widening the trade deficit, which has its spillover effect on the currency, and a weaker currency naturally has a negative effect on the Indian economy. So it's a little bit of a second and third degree, but real there. Because gold prices and silver prices don't seem to be taking the foot off the pedal. So I think Indian investors are more and more likely to keep putting.
Keep putting. And at these rates, silver, of course, hit that 4 lakh mark today. And of course, gold, overnight, 5,500 has been crossed as well. And, there's no stopping this rally. Don't know where it will lead or where it will head. But in terms of silver and gold, do you, envisage any kind of changes in customs duty, import duty? Would that be an expectation from your end?
Well, not an expectation, but a temptation for the finance minister to raise revenues, because clearly it's an unproductive asset as far as India is concerned. The more an import of an unproductive asset comes, precious dollars are getting used up. Right. So to that extent, it impact on currency, it will impact on RBI government borrowing rates, and there's a spillover effect. So government will definitely want to curb this. So putting in import duties is a way forward. There is a temptation. I'm not expecting it, but I think it's severely tempting for the government to do it. So I wouldn't be surprised if it happens. How the market reacts will be a different issue, because then domestic prices will go up even more, right? If you put an import duty, you're going to add the import duty to international prices. It could make the domestic returns from silver and gold go. And so how will customers react if government's intention is to curb the import? We don't know. And it will lead to Hawala route of bringing in gold, silver. So it's a very Pandora's box. Temptation is there, but I do hope the government doesn't yield to that temptation.
Okay. A point taken. For the lack of time, just a couple of more questions. Given the volatility in FPI flows, and that's something that has been noted in the economic survey as well, do you think there will be any significant steps towards reducing LTCG for foreign investors, even the withholding tax that has been, troubling FPIs for some time? Do you think there will be any changes to that effect?
I think you have been very kind to call it volatility. I don't think it's volatile. It's a one-way street. So it's only continuous redemptions, one after the other. So let me tell you that
I was just referring to the language used in the economic survey, Sunil.
Fair enough. But I don't see that the government, see, look at it from the government's point of view. They want FDI, right? Not FPI. Because the government really doesn't care about the stock market. If you look at it, the government's concern is about jobs, about core economy functioning, GDP growth. The stock market is a natural function of that. So I don't think that the government, and though I mean I know what I'm saying is going to be disappointing for all your listeners because everybody's expecting that government will promote the capital market. But you asked me, right? I don't think the government really is concerned about the capital markets because they may come up, they may go. Good GDP growth last year, but broader market was under pressure last year. So the government really can't take hold of that hot potato of trying to do that. Now, FPIs are hot money, right? So the point is that by inviting FPIs in, how is countries' growth in the GDP going to get supported? You will get more public issues where FPIs participate. As it is, they are participating very well in the IPO market. It's only the secondary market that they are, a bit volatile, to use your language. But so
Yeah.
to me, the government, if the only reason they could look at lowering the capital gains tax or doing something there is because they've been disappointed with the collections of it. That it's not really reflecting because it gets paid only when people book profits, right? If you hold your asset, India doesn't have an NAV-based tax, thankfully. So it's not really, I'm not sure it's really leading to much revenue. So maybe government takes a hard look and says, hey, we have this tax, but it's not leading to revenue. So then why not get rid of it, rather than go after it? So that is a very roundabout way. But the markets will celebrate that and will start roaring, right? So, but that could be a reason come from a different perspective. But on its own, I don't think the finance minister or the Ministry of Finance is really worried about the FII flows because they are blow hot, blow cold. Tomorrow, India's EPS growth potential, stores potential, they'll come running. If China or South Korea or competing countries go through trouble, they'll come running to India. So I'm not sure that could be a reason for doing that at all.
Okay. Got your point. But last question really. So, what would you say? Budget non-event, or would you say that could, in fact, revive the bulls? We did see some bit of buying coming in over the last 2 days or so. But would you say that much of the correction is out of the way? And if there is a positive surprise, in terms of taxation or any consumption boosting measures, would you expect a big move?
Yes, because the market expectations of the budget are very, very dimmed, very low, because the fiscal situation is not great. Because against 10%, 10.1% nominal GDP projection, we are coming with 8%, right? So that clearly that revenues and expenditure both would have come down to that extent. So clearly the expectations from the market and foreign participants is not very great. So given that we have such a low bar about the budget, any positive news and triggers will help the market run up. Yes, because we have kept our expectations very, very reasonable. We are not expecting a doom dhamaka budget. But I think that the budget will be more reform oriented. And I think those reforms, if they are directly related to capital market, like say public-private partnerships, something to boost private capex, then the market will respond positively to that. So I think the market is just waiting with bated breath because given the uncertainty in the situation, nobody has a great expectation from the budget. And that could be the very reason that the markets could rally post-budget, because even small good news, the market will latch onto it. But it's again the FII's way they view the budget. And for them, retaining our fiscal glide path from 4.4% this year to maybe 4.3 next year to ultimately down, and reducing central government borrowing as a percentage of GDP to 50% over a few years. These are important from an FII perspective, because if you slip on any of those, FIIs will get even more anxious about us. So I think maintaining fiscal deficit is top of the chart for me, from a rating perspective, rating agencies and FIIs perspective. And second aspect is that there should be a reform oriented. In all the geopolitics, I think the economic survey has laid it out very well. I think it sets the base for the government. And if the GDP, nominal GDP growth can be taken in double digit next year, it does give a lot of room for the government to do a lot in terms of boosting private consumption and private capex. So I think those two, if the government allocates a significant amount of resources towards, the market will take very positively to the budget.
All right. Of course, we will discover on a Sunday this time. It will be a full house on Moneycontrol as well. So you guys can catch the coverage there. But Sunil, thanks a lot as always for putting things into perspective. Always a pleasure. And of course, we'll have more conversations after the budget as well.
Absolutely. Sure. Look forward.
Thanks a lot. Well, on that note, of course, completely timed out. We've had a good day of trade. It was Sensex expiry as well today, but thankfully we ended the day on a positive note. Didn't really start on a positive note, but we picked up traction and managed to close above that 25,400 mark. But with that, we are completely timed out here. Thanks a lot for tuning in. Have a great evening and come back and join us tomorrow morning at 8:30 a.m. with the market. See you then. Thank you.